If an internet creator has actually generated $10 million in profit, they have very little reason to spend their day selling you a $50 PDF on how to copy them. We are deconstructing the mechanics of the modern wealth illusion. This is a look at the psychological levers used to manufacture authority and the specific ways these systems are designed to extract retail capital. Since 2020, retail market participation climbed to record highs as viewers chased online side hustles. During that same period, actual retail returns collapsed. This disconnect has triggered a federal response. The Federal Trade Commission is now investigating the deceptive earnings claims that power these social media funnels. Simultaneously, the Securities and Exchange Commission is targeting influencers who coordinate stock manipulation schemes, using their followers as liquidity to dump overvalued assets. The investment secrets crowding your feed are the entry point of a carefully engineered trap built to harvest your existing savings. The trap begins with manufactured status. Influencers use hourly exotic car rentals and staged penthouse photographs to project a lifestyle that, in reality, is entirely temporary and rented. This is followed by the fog, the use of complex financial jargon like arbitrage, or the practice of buying in one market to sell in another for a tiny margin. This terminology overwhelms the average viewer, making the creator's guidance seem essential. Actual billionaires, like Warren Buffett, tend to offer the opposite, simple, public advice. Buffett's primary recommendation for most investors is to buy a low-cost index fund, a single basket of diverse stocks, and hold it for decades. The influencer's objective is to engineer a sense of financial inadequacy. By making the market seem incomprehensible, they position their simplified system as a necessary lifeline for the viewer. These creators often lack technical business expertise. Their content frequently pivots away from specific operational skills to sell vague concepts like morning routines and abundance mindsets. Legitimate business models can be explained with clarity. If a creator cannot define their specific customer acquisition cost and business model in a single sentence, their actual business is likely the audience itself. The math of promoted systems like dropshipping is structurally difficult. This chart compares the rising cost of digital ad acquisition against static product margins. As the cost to reach a customer on social media increases, the profit window disappears. Without brand differentiation, you lose all pricing power. You're forced into a race to the bottom against thousands of other sellers using the same suppliers, eventually driving margins into the negatives. In retail options trading, the disadvantages are equally stark. Data shows that retail traders systematically overpay for options, purchasing contracts based on price swings that the market rarely delivers. This is exacerbated by the bid-ask spread, the difference between the buy and sell price. On a typical retail trade, roughly 8% of the capital is lost immediately to this spread before the stock price moves a single cent. Retail traders frequently hold losing positions as market volatility collapses. This causes time decay to accelerate, rapidly reducing the contract's remaining value to zero. These systems require the retail investor to assume all operational risk and structural drag. The coarse seller, meanwhile, remains entirely insulated from the market's math. In the internet hustle economy, the creator's wealth is generated by selling to the user. The purchase of starter kits, monthly fees, and masterclasses constitutes the primary revenue source for the business. True wealth building is a result of sweat equity. It requires the unglamorous labor of acquiring a specialized skill that provides actual value. The mechanics of accumulation are straightforward. Increase income through skills, live on less than you earn, and invest the surplus into broad market index funds. This process requires a long-term horizon to work. Real wealth is the result of compounding interest, a force that typically requires a commitment of 20 to 30 years to become significant. Walk away from any pitch promising easy money, secret loopholes, or overnight success. Sustainable wealth generation is a slow, unexciting process. Any promise of rapid gain in an investment is the primary signal of a scam.